Right, now get Insta Live. Let's go live. All right, there we go. All right, it's been a while. It has legitimately been a while since I've gone live. I went live with Robert Croak last week on his channel on TikTok, but I have not gone live here in a while. What's going on, everybody? How's Tuesday going? Is the week off to a good start? Mikey Mike Brantley, what's going on? How are you? Taco Main, what up? 8-6, what up? Blah, blah, 2, let's go. All right. I still have Street League shirt signed by you from 2012. Mike Whitley. Isn't it insane that was a decade ago? Time is moving a little bit too fast. My first daughter was born in 2012. Once we had kids, it seemed like time kind of started moving at too fast of a pace. Guys, share it. What's going on? Sunday, Monday, Lord, I'm bringing it back. I'm telling you right now, we're putting it out there. I'm gonna launch a full podcast called Mikey Days. Theme song. The best thing about Mikey Days, if we relaunch this thing as a podcast, only skaters are gonna know. I have so many people following me now that aren't skaters. This is gonna be brand new to them. That'll be fun. What's up, fam? What's up, El Cabor? What's going on? What's up, everybody? From South, dude, Mikey Days theme song was the alarm noise in high school. I think my GFS PTSD from it. I'm running it back. I swear we are gonna relaunch it as a podcast. Maybe I'll do I'm doing my YouTube channel. At least I'm starting to post consistently on YouTube. So maybe we'll do a podcast plus YouTube. But I think that's gonna be the theme song. I might have to redo the clips because back then it was, gosh, when did we start Mikey Days? Was that 2008 or so? So that was so long ago. That was such a fun time. Bring back the Mikey Taylor ones. Best shoe of all time. You know what? If I brought back my shoe, I'd either have to do it with a partnership. I need a sponsor. Somebody's got to jump off, sponsor me again. I don't know. What shoe company, this is a legitimate question I'm asking you. What shoe company do you think would sponsor me today? Not a pro skateboarder anymore. Have a following. I've engaged following. What do you guys think? Who do you think we could pull this off where I get a shoe sponsor again, we do a re-release, or maybe I don't know, maybe something a little more current because the shoe trends have changed. But are there companies today that would sponsor me in the product side of things? Shoes, clothes, etc. What do you think? I don't know. I would do that again. Don Brown. I saw the re-release of the Muska. That was, dude, I was around for the first Muska real launch. How much percentage return can you expect in real estate? You know what? It's all over the place. The thing about real estate is there's so many different ways to do it, and there's a lot of different asset classes that the return can vary. If you're buying stabilized product, what they refer to as turnkey. So basically you come in, you buy, let's say, an existing apartment building. It's stabilized, all your tenants are in, it's the least amount of risk and the least amount of work for you. You're typically gonna expect somewhere between let's call it 5 and 7% return, maybe 4 to 7% return. What a lot of people talk about for this type of real estate is it's like a bond alternative. A lot of players are buying this asset in cash right now, are very, very low debt. And then the more risk you take, the more return you can make. Right now, the return that we're going after is right around a 15% net IRR to investors. So once you remove our fees, our basically profit share, that's what we're trying to target. It's actually 12 to 15. And that varies. It can be all over the place. We have to do a heavy, heavy lift to get there. I would say some investors right now that are more light value add, maybe it's a paint, a touch-up job, redoing landscape, stuff like that. I don't know, maybe that's around 10%, I would say. I saw this today, actually. I kind of want to put this out there because this has been on my mind. And I think for a lot of people in business, if you change this, you can make a lot of money. So I put out a video yesterday basically breaking down how much you need to make to buy a $300,000 house. And it's doing its rounds. It's getting views. And somebody in the comments asked if I could do another video but break it down on a $250,000 purchase as opposed to $300,000. And as I went in to respond to her, somebody had already messaged her back and said, why don't you just reach out to a lender? Like a lender will give all this information to you easy. And then she responded and said, I've reached out to lenders. I've reached out to a ton of lenders. And every single one of them makes me fill out an application first. And it just feels like they don't really want to help me and they're just looking for the commission. And so I just had this thought. If you're in the mortgage industry, if you sell real estate, whatever industry you're in, the best way to do business today is add value for free. Start with the value. Use my video, for example. If I was a mortgage lender, I'd put that video out for free, giving you value and information. Then from there, I'd give you a pathway. Maybe there's a funnel to a landing page that then you could work with me. So you add value first, then that opens the opportunity to work for myself or you. Doing that model, you can make so much more money. You generate so much more leads, but there's so many people still doing business how it was done 10 years ago. They're missing out on an opportunity. I don't know. What do you guys think? Like, I'm a big believer in add value and create content, and then the leads will follow, as opposed to trying to gatekeep information until you give me your info first. What do you guys think about that? Good for you, my man. From pro skating to financial advice, you're the man. This one was funny. I got a comment 20 minutes ago. Oh, that shit ran out of storage. Oh, no, it didn't. I got a comment 20 minutes ago before I jumped on here. And this guy, I think his handle was Isaiah Photo. He was like, dude, I haven't seen you in so long. You popped up on my Explore page and I looked at your video. I was like, wait a minute. When did Mikey Taylor stop skating and start giving financial and investment kind of content and advice? And just as I was responding, I was like, dude, it's been like almost 7 years. It's been so long, but it's got to be such a shock still for people to see that. I just thought it was interesting. All right, what else is going on? Correct. Value add always. Chad Dexter always. I know. It's interesting because when I saw her comment that, my first thought was, let me think about how I can break this down. How you get your information has changed, right? Like when I meet somebody, I don't like look for their website or I don't look for their LinkedIn. I go to Instagram first. Like, what do they look like on Instagram? The way we go out about getting our information is typically from these platforms, YouTube, Instagram, TikTok, etc. And there's a lot of people that are putting information behind either a paywall or some type of information grab. And I think that's irrelevant now. Like, I mean, you guys correct me if I'm wrong, but it seems like my generation, Gen Z for sure, no gatekeepers. They're done with gatekeepers. They want as much information with the least amount of walls in front of it as possible. Would you guys say that's accurate? If so, I think there's a lot of people still doing business the old school way. Kyle Krug, do you have any good side hustle ideas? Okay, so side hustles, you got to be careful with side hustles. I'm not saying don't do them, but you just need to be careful with them. Why I say that? If you do a side hustle, you're taking time away from let's call it 12 hours available, 15 hours available, right? And if you're going to do that, well, I guess maybe it'd be more than that. Whatever your time allocation each day, you're taking away from that time by doing a side hustle. So you just need to be mindful that you're not diluting that main source of income or the potential to make more there. Now, for some people, they'd say, yeah, but look, I work a corporate job. I have no real upside anyway. I need some more income. Okay, for that, 100%. Just be mindful for the side hustle if you're an entrepreneur. I think that's where it can be more detrimental. Side hustles that I'm seeing right now, you know what? Where I'm seeing a lot of stuff is just on the gig economy, like creating content. The UGI, is it UGI? User generated or UGC. The UGC space is blowing up. And I have friends hitting me up that are not content creators. They're people that would never go in front of a camera. And they're like, dude, I use AI, whether it's ChatGPT or whatever source you're using to basically script out the video I'm going to use. I use Capwing to create the visual in front of it. I don't know what the audio AI tool is. They're speaking it for me, and I'm just consistently putting it on my YouTube with the correct hashtags, and it's getting a ton of views. There's a lot of people that are building big YouTube channels, creating content this way, and what that does is opens up two opportunities. One, there's a lot of companies buying UGC content right now, so that's an opportunity to make money. And two, there's so many affiliate programs where if you're creating content around a niche, and you don't even have to be like me, where you're like actually face forward editing it, you could be completely behind the scenes, and then you can sell product based on in line with that content. Push that to your Amazon store, whatever platform you're going to use for the affiliate links, and then start generating revenue that way. That, I think, is a big opportunity. Let's see what else I'm seeing people do. That's a large one I'm seeing. Affiliate marketing, direct, what's it called? Digital marketing in general or a whole. I think there's a big opportunity around people creating followings that don't know how to monetize it. Like if you're somebody who is good with creating product, managing your inventory, that could be a huge plug on for influencers who don't know how to monetize. Let's see what else. I would say the gig economy is where I'm seeing kind of the largest side hustle. Then you have your traditionals, right? You can drive cars, you can pick up food for food deliveries. You have all those available, but I would say maybe UGC is the big one I'm seeing. I don't know. What do you guys think? You think that's something that's interesting? My student loans are completely interest-free. What do you think about putting that in an index like VOO? Okay, so I got to start by saying I cannot tell you what specific investments to make. I can market my investment because my investment is it's an investment that I'm allowed to market and approved by the SEC, registered with the SEC. So that one I don't have to worry about. But when it comes to investing in like something like VOO, I can't tell you whether you should or shouldn't do that. But what I can say, Warren Buffett, which I agree with, said, if you don't follow the market inside and out, you don't know what to do, invest in a low-cost index fund. That is the best way that people should be investing, and historically it's done very, very well. So that's a good person that you can listen to, is maybe the best way to answer that question. You know what? You're very professional. That mic setup is amazing, and it's so clear. 8-6, pressure God. I appreciate you. Thank you. I'm trying to really, I'll tell you a story, actually. This was the game changer. Let me just make sure I'm not getting any comments from Facebook or YouTube that I'm missing. Okay. My partner and I, the COO of my company, flew out to Florida, 6 months ago. And while we were there, we were meeting up with a bunch of investors, current investors, and then potential investors for a new fund that we were launching at that time. And I got connected with Patrick Bet-David, PBD. And he was like, yo, swing by the office, and then I want to take you to Valuetainment. I want you to see the whole setup that we're building. I'm like, cool, we'll do it. So Michael and I went over there, went through his whole insurance, the office for his insurance company, took us through the podcast, took us to the new studio they created. Then we went and had lunch with him at his house. It was a phenomenal day. And what I was feeling, which I didn't tell anyone, not even Michael, was holy crap, we have to step up our content. Like when I just saw what they were doing, I felt like we were getting schooled. And, we finished that day out. 2 days later, we're about to fly home. I get on the plane and I look at Michael and I'm about to tell him this thought that we've got to step up our game. And he looks at me and goes, dude, we are blowing it on content. We need to 10x our content game. And right when he said it, I was like, dude, I was about to tell you that. It was insane. And so when we flew home, I scheduled a meeting with Tani, who basically manages my time. And I was like, Tanya, we need to redo everything. I need to go through a whole new priority stack. We need to find more time each day for me to create content. And I need a path for us to, I think we're trying to 3 or 4 exit is what we're trying to do. I need a path for that. So we redid my entire schedule. We started building out a studio, cameras, everything. And it's probably been about 4 months where we've been really upping our content game. It's been crazy. Like, what it's done for the company has been massive. What it's done for just me connecting with people has been massive. And I would say probably to bring it all home, where I think business is done well is when you can either, number one, solve problems, but 2, when you can add value and find a lane where you're either solving problems or adding something that someone needs. I think that's always the greatest way to make money. And so kind of what we're experiencing right now, we're creating content that, I'm getting messages every day on how helpful it is. The housing issue, I like the fact that we're adding housing and we're able to make money from it. We have more leads coming in from social for people to invest with us. I mean, the companies, we're starting to grow at what feels like a crazy rate. And I think a big part of that's social. So that's how we got there, hence the mic and the cameras, et cetera. All right, let's get to some questions. There was a couple rants. Did you just answer my question? The one moment that I turned down my volume, darn, heard the end about Warren Buffett, but that's it. Ben Croker, 1, 2, 3. I'm going to give it to you again. If you asked about VOO, what I said was one thing Warren Buffett famously stated, and I think it's spot on, that if you don't track the market inside and out, find a low-cost index fund that just tracks the market, an ETF, invest in that. I can't actually tell you if you should or shouldn't invest in a specific one like VOO, but I think his advice is solid. I think VOO fits what he's talking about, is maybe the best way I could say that. But I think that's sound advice. And dude, honestly, for me, my investments in the stock market are very basic. There's no shorting. There's no options. I invest in funds. It is so basic and generic. I just try to stay consistent with it. That's been my whole plan since I started investing. How long ago has it been now? 29, 39, 22 years ago is when I started investing. The whole strategy was consistency. Am I trying to invest every month? And what's the percentage? And stay with it. That's done so well for me. Singles and doubles. When I've gone for grand slams, I usually strike out. When I hit singles and doubles, every once in a while I get a triple, but that's been a very solid path for me growing the wealth I've grown so far. And then I do take more risk in business. So that's at least how I separate it out. I really like taking risk when I control it. When I'm driving the business, I invest in a risky way that way. Anything I don't like taking a lot of risk. Or if I'm going to, it's going to be a real small amount. Louis Lopez in the building. Louis is, Louis is so gnarly. I mean, he's been gnarly since he was a kid, but I like seeing his content, man. That FA, did anybody watch or go to the FA contest or what was it? The old school 90s graffiti and all the cars, whatever it's called. I thought that was sick. His half cab flip I liked. So do you actually build or just real estate? A6. So we typically build. That's the majority of what we do. So our multifamily or our apartment portfolio, we look for industrial, or the last thing we just bought was an abandoned car wash. We look for stuff like that in markets that are undersupplied, and then we scrape and then we build, we go vertical. That's typically what we do on the multifamily side. On the storage side, we buy primarily big box retail that's vacant. So I don't know, Walmarts, Kmarts, Bed Bath & Beyonds, those are going vacant, Radio Shacks, whatever. And then we scrape the inside and fill the inside with storage. So that's called an adaptive reuse. On the multifamily side, it's scrape and then development. Can you please speak a little about investing in states that are not landlord friendly, like New York? What if that's the place you know and don't want to go outside your area of knowledge? Kathy Angart. Okay, so I think this is going to resonate with you. We invest in California. California is as, I guess, close to a market as New York as maybe there can be. And people look at us like we're nuts. Why are you investing in California? That is the worst place to invest. But this is what I believe. I think challenge creates opportunity. And so if you look at California, for example, California is brutal to invest in. It is so difficult to build anything, right? And so what you had for years was investors going, I'm not investing in California. Why would I invest in California when I could go to Texas or Georgia or all of these markets where it's a piece of cake to develop? I get through my entitlements in 6 months. Why wouldn't I do that? And the majority of people do. And then what that creates is what we're experiencing in California. You're experiencing it in New York as well. No one wants to build. And so you add 15 years of no one wanting to build, and now you're undersupplied. California is the most undersupplied, I think, state in the nation. Ventura County is the most undersupplied residential county in the entire country. And so what has that created? It's created an opportunity to build. And so I guess I chalk it to bad legislation and bad policy is harmful in the beginning, becomes more harmful, but also creates an opportunity to get back on track. I think right now in California, it's that opportunity to potentially get back on track, but it still takes a long time to build. So with that said, yes, we're doing it right now. We're investing in our backyard that is expensive and difficult, but we're using the difficulty and how expensive it is as an opportunity to build, and that barrier of entry ultimately keeps competition out. Now, there's a different dynamic. Like I'm experiencing it right now. I posted a video. I posted a photo. When did we close on that property? On Thursday. We closed on a property in Ventura on Thursday, and it's a vacant car wash. Like I was saying, it's been vacant forever, and we bought it entitled. So that basically means we can build a certain amount of units ultimately by right. The city's already said this property is zoned for this and can build this amount of units, right? I posted it on my Instagram, and in each community you have what we call like the NIMBY movement, the not in my backyard. And they started blowing up my Instagram. Like, it didn't take me long to see that all the like accounts that, are for Ventura City had my face on it and, telling their followers, go tell this guy he's not welcome. We don't want investors here. You're ruining our city, right? And in some ways, like I understand some of the pain point, right? You have a city that you like and you don't want what makes it special to go away. Understand that one. When you build, typically adds traffic. Understand that one. When you're adding density, you typically have a percentage of increased crime. Totally understand that one. But, a big pushback is the housing needs to be, it's not affordable. It's too expensive to build. Or no, it's too expensive to rent, right? And on that kind of portion, that's kind of the highlighting of what policy creates. When you have a population that's growing and you don't build, you're making it so the supply is significantly below the demand. And when that happens, pricing runs out. When it comes to building real estate, and to keep it very simple, builders build when the rents are higher than the cost to build. Let's say it that way. And so they go into market, they build. Builders typically overbuild. It's usually what they do. And then once they do, people stop leasing up. There's too much product, so you see increased vacancy. When that happens, you see rents and pricing plummet. And when it plummets, then all of a sudden, rents go below the cost to build, and you see buildings stop. And it typically stops for a while. That's the correction until the population and the demand builds up again. And then all of a sudden, rent goes above cost of build. And then all of a sudden, the cycle starts over again. That is typically what you see in the majority of states throughout the country. But when you have markets, and this is happening significantly in California, that have stopped and limited growth, you're not allowing the market to fully correct. And then you have basically the perfect storm, if you say, with institutional investors, BlackRock gobbling up single family. You have the rise of Airbnb, which the percentage of what they own isn't huge, but that's still taking homes off the market. You have 30% fixed rate at sub 3%. You're taking all this product off. Then you have interest rates rising because of this whole inflationary issue, because we printed an ungodly amount of money. And what that's done is stopped building, right? Builders can't build right now, or a lot of building is on hold. And it's just increasing the challenge we have of the undersupplied nature. So I think there's, from an investment standpoint, there's a strong argument that the areas that are the most difficult to build, if you can build, you can do really well. For just the overall people, I think these cities need to open this thing up wide open. I think you've got to, in my perspective, you've got to get buildings online faster, which saves a lot of money, and just let them build and get to a point where you're actually meeting demand. I'd actually say you should go over demand so you actually see a healthy correction. That would be my 2 cents. Mikey, report has it that BlackRock is no longer investing in SFR. I'm going to look into that. I'm not aware of that actually, but I haven't looked into it in the last month or so. I hope they're not investing in single family anymore, because they were going nuts on that one. I'll look into that. Thank you for that. What would you think are the pros and cons of automated investing with AI portfolios? Eddie Badal, that's a really good question. Okay, I think AI tools from an investment standpoint are probably smarter than we are right now, as far as telling us what to invest in and what not. But that's not actually the challenge of investing. The challenge to investing is for us as individuals to control our emotions. That's by far the hardest part. And so what I don't know what's going to happen is, when you have an individual that's helping you invest, let's say a financial advisor or a friend, when your emotions are ramping up and you're getting scared, you usually have somebody that's going to, in some cases, talk you off the ledge. That could be the biggest saver of your investment that exists out there today. Because if you sold in a time where you shouldn't have, and that investment was a good investment that was most likely going to rebound, that's on you and your emotions. AI, I don't see how they're going to help us control that side of it. If you're somebody who's like totally good at controlling emotion, and when times get bad, you don't listen to the media, you don't listen to everything that's going around you, and you could stay solid, yeah, AI is going to be pretty good. But I think how AI actually invests, I think it's smarter than we are, is what I would say. How do you feel about California Senate passing ACA 1 and ACA 13, which is dismantling Prop 13? Sylvia, I'll tell you my perspective. I have a perspective that, I'll say it this way. I don't love the idea of big government. I just don't. I look at government as an absolute necessity, but the government is the biggest corporation we have. And I don't like when they take more away from individuals, incentivizing individuals to do what they need to be done. Like making it more expensive in California, where it's already more expensive. I don't understand how that creates a booming economy. I don't understand how that creates more real estate. It makes no sense to me. I'm of the belief that if you want people to innovate, if you want people to build, whatever you're trying to do, you create a pathway of incentives to move behavior in a certain direction. I think that works. Adding more costs and fees, I think it's a short-term solution with a long-term negative impact, is my belief. But I think the first part in which I stated is important to know. I don't think the government should be coming in to try to save everything. I don't view that role as the government. I like a small government, and I like us doing our thing as individuals. So maybe it's going to depend on your view of government, but for mine, I don't think that's a smart move. I think that's a ridiculous move that's only going to drive more people out, which means less investment here, which means an increased challenge with the housing supply. I don't know. What is your guys' 2 cents? Do you guys agree? Need better legislators. Yeah, Sylvia, yeah, the political, our politicians, our political systems, I think it's a little frustrating right now. Is $20K enough to start and scale up a rental property business? Yes, it is. You might be limited to a certain demographic, but you know what I would say on that one, Ryan? Learn how to do it and then use other people's money. Bring partners in. That is in my perspective, the best way to scale, because if you're only using your money, you're very limited on opportunity because you can only buy what you can afford. When it comes to investing, and what I love about it, and we experienced this with St. Archer, there's a lot of people that have money that have jobs that don't want to go out and build a real estate portfolio. They don't want to put in a lot of work to find an opportunity, but they want to make a return on their money. That is a great way for you to get paid off of the knowledge and work that you're willing to do. And then you have other people's money to help you get the asset. They're going to take, in a lot of cases, the majority of the return, but you're now making a return and able to build a portfolio that's not limited to the amount of money you have. That's what I think the best way. That's what I think the best way to build a portfolio is. Mikey, do you think if you moved somewhere else like the Midwest that you'd make more money? Seth, good question. I think there'd be an immediate saving of money just because the state of California charges so much in just state tax. But I think my potential to earn money, let me take a step back. It's actually a really good question you asked. Right now, I think I can make more money here, but I think that's changing. Prior to the last year, when we were raising capital, which is basically year round, we've been raising money as a company since the beginning of the company. It's primarily come from myself and my network and meeting people and being in front of people. Is more of like an old school approach of relationship building. That's changing. Like, we're at the point now where the majority of our investment comes from social media, actually. Like, it's crazy how many people we're talking to every day from social for potential investors. That's where the trend's headed. So I think there's going to be a point here very soon where it doesn't matter where you live. The amount of income potential is the same. But I would say the other part, I'm competitive. Like, I am a competitive person. I want to be surrounded by people that are pushing me and challenging me. And I think that dynamic is still relative to certain areas. Where I live, there's a lot of action going on. I like that. If I moved somewhere, I don't know, let's say Idaho, I don't think that energy exists in Idaho, or not yet. The Carolinas, even though the Carolinas are trending that way, but I guess that would be my only pushback, is the competitive side. And I think that's temporary. I think we're going to see, I don't know. Let me ask you guys, do you think we'll still see this migration that's happening, or do you think it's subsided? Do you think everyone who moved to Florida is staying in Florida? Everybody that moved out of Cali is have the chips fallen? Or do you think we're going to continue to see a lot of people moving around? That might be dependent on lockdowns, actually. I think a lot of people left. I think a lot of people left because of lockdowns, personally, and I think cost of living is probably the second. Would you suggest starting a drop shipping business? Yes, 100%. I think there's a big opportunity for anyone who can move product. And I don't think you need to build a whole business around it anymore. Like, what you had to do when I started my business, you had to be the everything. You had to create the product. You had to you had to figure out who was going to create the product. Then you had to manage the inventory. You had to distribute it or find distributors. You had to build a legitimate business if you wanted to sell anything. It's not the case anymore. You just need to sell now. And so I think that's a big opportunity that is only going to increase. I like a lot of this affiliate programs now, like the Amazon marketplace, Even a lot of these platforms are creating marketplaces. If you can sell product, you can make a lot of money. You don't need to be a business. You don't need to understand business anymore. All right, I'm going to tackle one more, and then I'm flying to Sacramento tomorrow for, I've got to do some city council stuff up there. And so I want to go see the family and kids tonight, spend some time with them before I do. Okay, Michael, I'm going to answer this one. As a first-time home buyer, would you wait for the housing market prices to fall or buy a house now? Michael, this is what I would say. Let's end it on this one. If you're wanting to buy something that you're going to live in for 2 years to sell and then move into a bigger house, I would not do that right now. If you're willing to live in a house for over 5 years, let's call it 7 to 10, right? Whatever house you want to purchase, you are okay if you live there for the next decade, buy now. I don't think it matters, honestly, because it's your house. And typically when you own something 10 years, you're usually in it long enough for a rebound or to get through a market correction. So if that's your outlook, buy now. If you're wanting to play the game that many people do, where it's buy, let it appreciate, sell it, move into a bigger house, just know that you're taking risks that may not happen in the time frame you're hoping. All right, everybody, have a phenomenal rest of the week. I hope everything is going well. I hope you guys are all crushing it out there. I will see you guys when I get back. Let's do another live next week. All right.